All right, let's walk through just some light volume analytics for Apple and why I'm not a buyer of Apple at the moment. And you'll see that as we walk through here. So this is Apple from 2020 through beginning of 22. And what are we looking at? So if you never looked at a volume profile chart, it can be helpful to understand what you're looking at. So this histogram represents the accumulation of buys and sells at those prices. So I can identify a couple areas over this move from the April 2020 lows to the beginning of 2022 that are fairly significant. I've got an area right here around 148, let's call it like that. Some nodes around 125 down to 115. So there's kind of an area down here. Auctions move higher. So a question people ask all the time is like, well, should I buy this? What do I expect to happen next is the key question. So I'm just gonna highlight some of these zones, and we're gonna kind of walk through the chart as we go forward. So we got these first two. All right, what we're gonna do is we're gonna step forward in this chart. Now notice that the first pullback comes to where? Comes right back to this first zone. That's not a coincidence. The auction process is that price attempts to go in a direction. Well, for the price to sustain, you have to have additional participants in that direction who can queue up energy. Sometimes an auction will actually trade counter to the trend, not as a way to turn, but to invite participants back into the auction. And where are those places we're likely to see that? It's going to be where there's been prior inventory and prior participation. Okay, so now we've come back down here to like the 150 area. Notice that we've started to develop an area around 173. All right, so let's highlight that area and let's walk forward on the chart. And notice that after we had developed, let's go back here. After we had developed, so we had developed here, came down to this node around 150. We auctioned back higher. Where do we go? Back to this node. Unable to sustain in this zone, we come back to that prior area that we were before. Now notice this time unable to get back above this. So then where does the auction go? Into this area. Now it doesn't have to be like exactly to a node, although often it is, but you're really looking at these zones of participation. And then what happens? Auction starts stepping back through them. Notice all the time we're getting more and more development, and what's happened overall is that what was looked very much like this, now the auction is starting to fill out at these higher prices. If you want to add to a position or hold a position, you want to be able to see more acceptance. Now, what would I not want to see? I would not want to see Apple below these prices. Why? Because then that would open a move back to these prices. So that also helps me from a risk management standpoint. If I'm adding into a stock or a future or a coin or any, because this works in any tradable product, I'm looking to defend areas where there have been prior participation. Okay, as we move forward into 23, we notice, look at where we're spending time doing business. All of the areas that we had pre-identified. It's not a coincidence. Not a coincidence at all. All right? Going forward, we see as the auction's able to get above, comes back, checks this area before, and now we're to the current spot. Ooh, current area. What should we be looking for in Apple? So am I a buyer for Apple? Just using the volume analytics alone, I would not do that. I think the opportunity could be, hey, at least let me get down to like a 172. If I buy there, what do I got to defend about? If I can't hold this area, where am I likely to go next? Back to 145 area. If I can't hold there, it's here. But then if we zoom out and think longer, which most people are going to hold these products for quite some time, or at least intend to, if I go back to 2019, you can see that the most volume is still way back down here. Now, do I think that we're going to go down to those prices? I don't. Could it happen? It could. But as I look at where Apple is just in the last number of years, where's a price that would be advantageous, and where are the magnets? At the very least, it would be here or here. What would make me a buyer at 195 is if this started to get built out more, where I could then defend. Like, so if we come down here to 172-ish and then come back up into this area, build this out, I could buy, but what am I going to defend? I'm going to defend against the auction going back in this way. Because how much upside do I have? I don't know, and nor do you. That's the thing. I do know this: if you want good trade location, don't buy when the inventory is diminished to the upside. The opportunity for the auction to come back lower and give you a better entry is too high. So that's why I'm not an Apple after this earnings report. One other just additional add to this is that if I start adding the anchored volume weighted average price from prior references, and what I'm going to add a bunch of these here just as another insight, going back to October of 21, this includes every quarterly earnings and annual anchored VWAP, aside from the most recent one, because we just had earnings, but this was the prior quarter. You can see we've just come back to the first of the last 2 years of annual anchored volume weighted average prices, as well as all of the earnings. I'm not a buyer of a product when we're above all of these references. I'm buying above value. And if you want to lose money in markets long term, what do? You buy above value. That's how you see value. You can see value through something like a volume weighted average price. You can also see value through an accumulation of inventory in the volume at price. Hope that helps.